Hey guys, hope you have a brilliant day. Hope everything is well. Welcome to the market break recap video actually that is following up on the market breakdown which I did with the group last week. So what I'm actually going to go through is how I actually approached gold shorts and USDJPY longs this week. And on top of that, the best bit of all is I actually dropped this in a market breakdown of last week to one of my students, just exactly what's going to happen in the market, and it's brilliant to see price play out in the way that we wanted to play out. And with this video, like, comment, subscribe, and I hope this video is going to be beneficial towards you. So let's get straight into it. The reason why I was actually short gold was due to the fact that if you look at order flow in looking at the previous 2 months, we've had 2 bearish months in looking at, for example, the current month that we're in of March and also in February. So what price managed to do was react to the key level of supply zone of this last bullish candle which pushed price lower, this monthly bearish OB. You see how price managed to find resistance within that specific zone. So what happened, there was a price managed to sweep this previous month's high of January of 132,630. So price sweep that of that significant level, dipped into this lower, this bearish OB, and managed to sell off aggressively. And it created a swing high fractal, like a higher, and then a swing comes in there. And the reason why my price managed to reverse at this specific level is because it broke market structure. As you can see, it closed below this significant monthly low. And the monthly low of that significant level was 12336.5. So price managed to close below that level, managed to retest the block, sweep the previous month's high as 1326, managed to create that high of the month in February, and managed to eventually sell off. And my initial targets, if I was looking for shorts, was this January's low. So as you can see, you always look where the liquidity targets are in price of 1276.6, actually 0.7 actually, because you round it up because of institutional numbers. Let me mark out the monthly open. The monthly open is 13137. So 13137. So we're also below the monthly open. So it gives us further understanding of price, knowing the fact that our order flow is bearish. One, because we hit a key level of resistance with this last bullish candle, which pushed price lower, managed to retest the block, managed to sell off, create a swing high fractal, sweeping the previous month's high of January of 13263, and the low of that particular month of 1.276.7 would be the ultimate target in looking at shorts for price. And also respecting price structures, we're going to look on that on a weekly, and currently below the monthly open. So there's a fair few confluences in seeing that price is actually very bearish on gold. But the thing is, this is the funny part. As we went down to the weekly now, we go down to the weekly, what I was expecting that, as you can see, price, this was the block on the weekly, that's within a monthly block. Last bullish candle pushed price lower, swept below this low. If I mark this level out, price managed to find resistance in that specific level. So it's funny how price sweep the monthly high, create a high of that specific month, and managed to sell off with an aggressive bear candle. And the funny part is about the whole situation is the fact that price was creating a higher low right before the potential higher high, but I wanted to sell as soon as price managed to came into this key level over here, this last bearish candle, which pushed price higher, sweeping this monthly high of 1326.3, which was the previous month's high. This was the last bearish candle, which ran the stops, came into EQ of this weekly block, managed to break below that significant level and break structure below this significant low. And the low of that level is 1297 region. So price managed to close below that significant level, showing that prices wants to go lower, market makers want to push price lower, and showing there's a breaking market structure as the candle closed below the significant low. Funny enough, we also came into a level of key demand zone, or this last bearish candle which pushed price higher, this demand zone of this weekly bullish order block. So price managed to find a support level in that significant aspect after sweeping the previous week's low of 1290, coming into this block, filling the block, and retracing back up. I missed my initial longs because it didn't give me an entry point which I necessarily required for me to long it straight back into this key area of this specific weekly breaker, I was looking for either the weekly breaker or this last bullish candle which pushed price lower below the significant low of 1297. And as you can see, the weekly open was 129792. So let me mark that out now. Okay, 12792. Funny enough, that's actually where I took profit. 12792. So as you can see, price managed to come back, break structure down to the downside, closing below the significant weekly low of 1297, closed below that level, came into a demand zone, price failed to create a higher high because it's finding resistance at this weekly breaker. Let me mark out the weekly breaker. So you see how price managed to dip into it, sweeping a previous week's high of the 1300 level. Let's go on to the daily, it'll be more clearer. As you can see, this is the last bearish candle which pushed price higher, which ran the stops into the weekly block. So price managed to accumulate within this level and closed below the significant low we were speaking about. You see how this is where I actually wanted to go long for the previous week, straight off this specific daily block. But I would have taken like a lower time frame entry, but I'll show you that later. What I was looking at in terms of price was the fact that I wanted a retracement even in two key areas on a daily. So it was this last bearish candle which pushed price higher, or this last bullish candle which pushed price lower. So these are the two levels of key supply zones I was expecting price to be able to dip into and immediately reject. So what did it do? It came into this last bearish candle which pushed price higher, that's within EQ of the weekly block. So as price managed to find resistance to that level, I went down to the 4 hour. As you can see, this last bearish candle which pushed price higher above this significant, very minor 4 hour high. That's where there's the zone that I sold in. So if I mark this out, you see how price managed to dip into that level. So entry here, stop above about 30 pips, 180 pip target, and that's about a good 6R. So that was literally, for example, what I was looking for me to be able to look for my shorts. And if I wanted like a serious entry, I would have got off this hourly breaker and managed to catch the top, which was a pretty sweet entry. And I was literally just making sure I come back all the way down to the weekly open. So I managed to take profit around that significant level. At the moment, I think gold will probably go long and come back into that significant level for price to create a higher low. It's funny how I managed to take profit whilst adhering to the levels of order flow. Good example would be, I'm only using these channels just to, I'll help you understand the structure of price of higher lows and higher highs. So price creating a higher high, creating a higher low, creating a higher high, selling price straight into the higher low. So just so that, for example, so when you come into the next level of demand of this last bearish candle which push price higher, so that when it reacts off them levels, it doesn't take you straight out, so you don't be holding price for too long. So you know your key levels of SNR, so you'd be a little bit more comfortable in looking at price and utilizing them specific key levels, and also knowing where price is going, but also just knowing how to jump out of specific levels and making yourself feel comfortable knowing where price might potentially reverse. So that was my trade that I took on gold. It was shared with the group, and I'm quite glad to know the fact that price managed to play out in the way I imagined it to do so. And if I am going to take a future short in price, I'll probably look for prices within this significant level of the 1323 region, but at the moment I'm just going to keep away from it for now. But in terms of now, we'll go on USD yen. The reason why I was actually looking for longs on USD yen, funny enough, I'm actually bearish on USD yen when it comes to eventually this block over here. So when it eventually comes into that monthly block, this last bullish candle which pushed price lower, that created a stop run below this level over here, that swept this liquidity low. Actually didn't even sweep it, but yeah, that significant level over there. This last bullish candle which pushed price lower, as you can see, of 112,300. That's where I'm expecting price to be able to sell off of that significant level. Why is that? Because I think price will probably fail to create a higher high at this level of this short term, of this long-term supply zone, and this last bullish candle which pushed price lower. So this up candle prior to the down move, this bearish OB. I'm expecting price to dip into there and eventually sell off back into this block over here. But funny enough, as you can see, we had 2 bullish months on USDN. We had two bullish months on prices create a high and continuously order flow is bullish in that essence. I marked out this level of this level for me to be able to look for potential longs just to support my bias. This is a down candle prior to not move. Price managed to find support of this significant level of this down candle and little up move. Price managed to dip into that level, reject back up, and expand up to the upside. As you can see over here, the monthly open is 11380. 11380. 138. So we're currently above the monthly open. So now, if we look on a weekly, the weekly is actually the one that gave me a little bit more clarity on what to look for. And the reason why I'd say that is because what I'm anticipating is price to eventually use this as the key level of short-term supply. I expect price next week probably most likely to dip into that level and then reject back down to create a higher low. But the thing is, as you can see, what I was talking about on a weekly or monthly, price has just been very, very bullish. So I was respecting price structures and creating this higher high, creating a higher low, potential higher high. So that's what I was looking for in price for me to look for these particular zones. And on top of that, it's just respecting basic market structure of price in terms of high and high and high lows. And the funny part is the fact that I'm looking at the weekly open. The weekly open is 111,011. So 111,011. Oh, whoops. Let me do that again. Cool. That's that. So above the weekly open as well. So the daily is the one that actually gave me more clarity. Why? Because as you can see, price managed to create there was accumulation in price. You know, there's been an accumulation in price where, for example, you have a basic buy model occurring in this significant level where price has accumulation right before the expansion, right before the retracement, and then right before the retracement, and then another accumulation right before the reversal. And the funny part is about the whole situation, when looking at price, that as you can see, this is last bullish candle push price lower. As you can see, price broke structure to the upside of this daily breaker. So if I drag that across, it's huge. We're a level of demand. Price managed to break above that significant level. It also closed above the significant high of this level of 110,650. So price broke MS above that significant level. Cool, that's all right. So price managed to close above that level, and this is the last bearish candle which pushed price higher. So as you can see, is the last bearish candle which pushed price higher. Price dipped into that significant level and expanded towards the upside. And I held this trade for quite a bit of time, to be fair. And as you can see, this was the last bearish candle which pushed price higher. This is my entry. Managed to find this was a significant level where I bought from price, so we find it down to the hourly. You know, I bought straight off that specific 4-hour block, but the thing is, if I wanted a better entry with serious RR, serious risk to reward, you could have bought off that hourly block, and that's the last invalidation level, which makes it even better. So if you, that's about a 10 pip stop, and that would have been a 10-hour trade. The thing is, I wanted to keep on the safe side, so I use a 15 pip stop for 100 pip gain, so it's about 8 to 9R. So either way, I was pretty happy with that level. So what I did is just hold my price levels until where was my initial target. I looked on the daily to see, for example, which specific level of price will I be able to touch. I said that I'll take majority of my profits at this last bullish candle which push price lower. Why? Because you know where price is going to reverse, etc., etc. You know, so if you can be able to look at where price is going to reverse, that's probably the best spots to take your profits. So if you're looking at, like, I'd take the 13 pip stop and then hit your TP about 90 pips, which is about a good 9R trade. Those are the levels where you want price to be able to change. And also, as you can see, again, price does similar things when it comes to structure. It also broke an MS above this significant liquidity high, above the 11650 region. So price manager closed above that significant level. This was the last bearish candle to push price higher. I reckon we're going to look for further longs straight back into the weekly block, but this will be the liquidity point in where you're looking for price to, what's the word called, reverse at. It's coming to this 4-hour breaker of this significant level over here. This last bearish candle to push price lower below the significant liquidity low. It's funny how price managed to dip into this level and is now looking to expand to the upside. So even if I get a fib from the low to the high, that's cool for you to be able to look for your price levels, bang on the 61.8 retracement level. So it's all about just understanding how price structures work. When you have a good, fantastic idea in the way price works, you can be able to understand the expansion levels, where to take profit, feeling more comfortable in your technique and understanding of price. It all comes through back testing and forward testing. So after a period of time, once you understand what you need to look for within the markets, then you can be very, very comfortable in knowing how to be able to make sure you're very comfortable in following your trading plan. But I hope this is one of the videos that gets distributed on a weekly basis during a YTK membership. So if you do want to get involved, just let me know via DMs. The links, not the links in the bio, but in my current bio section, you're going to have the links towards my Instagram, and you can always DM me any type of training information that you might require, or even if it's just like little bits of advice, just hit me up. It's no problem whatsoever. And I hope you guys enjoyed the video. Hope it was insightful. It's probably you're getting the double trade in this one. Majority of the time I just always just put in one trade, but this is the same video which I'm dropping into the YTK membership on today. So I'm going to drop it free for you guys on YouTube. Just let me know what you think, drop me some feedback. I hope you guys had a fantastic weekend, and let's go kill the markets again next week. So nothing but love, enjoy your weekend, and definitely catch up soon.